Hello, welcome back. It's August market update. Tony Marlette Jr. at Brookside Tax and Financial Group. Let's get right to it and take a look at what we saw for July. Markets continued what we saw in the first half of the year into July. We mentioned the highs that were set January through June. We set some new highs in July as well, with the S&P 500 up for the month, two and a quarter. Dow Jones was relatively flat. NASDAQ was up almost two and a half, and the Russell small caps were up about 1.75%. So for the second half, we mentioned we're seeing some continued growth here. We mentioned the new all-time highs for the S&P 500. As far as the drivers of this, we're looking at really three main things. Corporate earnings, which has been the biggest driver, 80% of those that reported earnings submitted those that were above projections. Another driver here has become increasingly favorable trade agreements, and then also an uptick in investor confidence. So as far as the sectors here and the companies, technology and AI, not surprisingly, have been leading this resurgence. I think the biggest question on a lot of people's minds regarding this is, can earnings for the other sectors in the market keep up with tech and AI? If you remember about a year and a half ago, we saw the Magnificent Seven dominate the other 493 companies in the S&P 500. We could be looking at a situation like that going forward with tech and AI as well. As far as the trade front goes, there have been some big developments with the European Union and Japan, signaling really a change in economic cooperation globally. These are not just simply tariff reductions, but also capital investments in America. So those should continue to snowball some earnings and allow us to see some more positive growth going forward. Obviously, on all this, the optics are very powerful. It's not the best investment strategy, but when markets are going up, people want to get in. We saw when markets are going down, like in April, people want to get out. However, as long as we have strong earnings, favorable trade agreements, and improving fundamentals, these things are more important and more telling than any trends can be. It's important to remain vigilant. As encouraging as these developments are, it does warrant some additional monitoring going forward. If you'd like to monitor your financial situation and have us help you with that, feel free to do so. If you reference this video, not only will your consultation be at no cost, but you can also pick up a copy of one of our books on retirement planning and estate planning as well. From all of us at Brookside, we thank you for working with us, and we continue to look forward to working with you.